Hey everyone, welcome back to Corporate Decoder, the place where we look behind the curtain of corporate filings and pull back the veil of secrets. Today we're diving into a report from Dover Corporation, and let me tell you, they're making some big moves that will likely grab headlines in the upcoming year. Before we jump in, if you enjoy having complex financial documents broken down into plain English, hit that subscribe button. Also, we have a fantastic Discord server linked in the description below where we discuss these filings in real time. So we've got the latest update from Dover Corporation. It seems they are planning some significant financial maneuvers, particularly around their own stock. Let's unpack what this means for investors and the company as a whole. The big news here is that on the 10th of November 2025, Dover announced an accelerated share repurchase program, or ASR, with JP & Chase. They are planning to buy back a massive $500 million worth of their own common stock. Think of this like a company saying, "We believe our stock is a great investment, so we're going to buy it back ourselves." This usually signals confidence from management that the stock is undervalued or that they have excess cash they want to return to shareholders. They are not waiting around either. Right away on the 12th of November 2025, they will receive over 2.3 million shares. This is a significant chunk of the total shares they plan to repurchase. When a company buys back its own stock, it reduces the number of shares outstanding. This can have a few effects for investors. It can increase their ownership percentage as they now own a larger slice of a smaller pie. It also often boosts earnings per share because the same profit is now being divided among fewer shares. Dover plans to fund this buyback using cash they already have on hand, so they are not taking on new debt for this. Now, the exact number of shares they end up buying back isn't fixed at $500 million. It will depend on the average stock price over a certain period, with a discount applied. This is a common structure for these types of programs, allowing companies to take advantage of market fluctuations. The final settlement is expected to wrap up by the second quarter of 2026. But there is a possibility they could end it earlier if certain conditions arise. Let's quickly look at what is actually registered and traded for Dover. They have their common stock trading under the symbol DOVE on the New York Stock Exchange. They also have some notes, essentially loans they've taken out maturing in 2026 and 2027, trading under symbols DOVE26 and DOVE27 respectively. Also on the NICE. This gives us a snapshot of their publicly traded financial instruments. This report is filed as a Form 8K, which companies use to announce major events that shareholders should know about. Think of it as a special bulletin for significant corporate developments that aren't part of their regular financial reporting cycle. Now, as with most corporate filings, there is a section dedicated to forward-looking statements. This is where the company essentially tells you, hey, what we're saying might involve predictions about the future, and those predictions come with risks. Things might not turn out exactly as we expect. They list a whole host of potential issues. From general economic conditions and supply chain problems to natural disasters and even legal compliance risks. It is a standard disclaimer, but it is important to remember that even when a company sounds confident, there are always uncertainties. And the report is signed off by Yvonne M. Cabrera, who holds a pretty senior position as Senior Vice President, General Counsel, and Secretary. This adds a layer of official confirmation from the company's leadership. So, what is the big takeaway here for Dover Corporation? Management is clearly feeling bullish about their company's prospects. Enough to commit $500 million to buying back their own stock. This move is generally seen as a positive signal, suggesting they believe their shares are a good investment and aiming to increase shareholder value through stock price appreciation and improved earnings per share metrics. The use of existing cash means they are not increasing their debt burden for this repurchase, which is also a good sign. The fact that a substantial portion of the shares will be bought back very soon indicates a strong commitment to this strategy. Looking ahead, investors will want to watch how this impacts the stock price and the company's overall financial health as the repurchase program progresses through 2026. It is a bold move, and it will be interesting to see the impact on Dover's stock performance and its position in the market. That is our deep dive into Dover Corporation's latest filing. What are your thoughts on this significant share repurchase? Do you think it is a smart move? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more corporate insights. And don't forget to check out our Discord community, linked in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next one.